Check out how much Ray Dalio, the founder of Bridgewater, the most successful hedge fund of all time, makes. He made $2 billion last year, which is about $5.5 million per day, or $228,310 per hour. If he worked 24 hours a day without sleep, which he didn't, he gets a solid 8 hours. And these numbers are why they call him Big Daddy Dalio. Actually, they call him that because he forced them to. Bridgewater has this amazing culture called radical transparency, where everyone is completely honest with each other. So Ray was simply like, if I'm being honest, I'd like you to call me Big Daddy. He originally wanted Big Papa, but it was already taken by some guy in Brooklyn. Oh, radical transparency, what an idea. You know, one time I had a boss that tried that, and we did it for about 3 hours, at which point he left the office and he didn't come back. It was too radical for him. So from that point on, everything became radically opaque. See, radical transparency is no joke. And as you could probably imagine, the company eventually folded. But anyway, how did Ray Dalio make this much money? That's what we're gonna talk about in this video. So I was out doing my normal reading, and one of the best things you can read on Fridays is Macro Ops Macro Musings. So Tyler wrote this one, and he said that in the beginning of 2018, Dalio went on TV in Davos and said something along the lines of, you would look pretty stupid holding cash in 2018. And as we know, and as I explained in previous videos, cash then went on to be one of the best performers of 2018. And of course, the internet took notice and they trashed Dalio, making fun of him because his Davos prediction was wrong. And people just wrongly assumed that Dalio just stuck to that call for the full year. But obviously that's not what the best traders and investors do. They're fallible. So Dalio and his hedge fund Pure Alpha updated their outlook as the year played out, which, as Tyler again says, is something every good trader does, and they posted some killer numbers, their best since 2011. So he linked to the full article here from the Institutional Investor, and it says Ray Dalio's Bridgewater Associates topped most other hedge funds last year when his flagship Pure Alpha strategy posted a 14.6% gain. And that's amazing considering how many hedge funds blew up in 2018. Tons of them closed, tons of them had huge redemptions, like Einhorn, for example. But Big Daddy and his Bridgewater babies, they are on a different level. That's a good nickname to have, Big Daddy's babies. I'm sure Bridgewater Associates love going out and introducing themselves as Big Daddy's baby. So the 2018 return not only marked the strategy's best performance since 2011, but it also resulted in a mega payday for Dalio, who personally netted a cool $2 billion, according to preliminary estimates. And that's after he made $1.3 billion in 2017 and $1.4 billion in 2016. And we already talked about this, but that $2 billion breaks down to $228,000 per hour. That's insane. So this Pure Alpha strategy that we're talking about has generated an annualized return of 12% since its inception in December 1991. But it posted a long streak of mediocre returns from 2012 through 2017, producing gains in the low single digits each year, which is understandable because every strategy, even the amazing Dalios, has cycles. They're gonna go through cycles where they do really well and other cycles where they don't do as well. But even so, even with the bad years, Pure Alpha has made money in each of the past 18 years and only lost money in 3 years of its total existence. Again, another amazing feat. And even this 12% since inception is just incredible, especially considering that these guys are managing billions and billions of dollars. And the more money you have in the account, the harder it is to make those outsized returns, which a lot of newer investors don't realize. So when they see 12% from Dalio, they're like, oh, who cares? But no, it's ridiculous. And here's another stat. When I said before that Bridgewater was the most successful hedge fund of all time, that's absolutely true because Bridgewater had generated $49.7 billion in total net gains since the firm's inception, which is more than any other hedge fund firm. And this is the number before their 15% gain in 2018. So they really are the best. Now, I think they have 3 strategies total, but their 2 main strategies are Pure Alpha, which is the one we've been talking about, and then also All Weather. So Pure Alpha invests in more than 150 markets and is prepared to go long or short in each of these markets. So here's another article from Fortune that explains Pure Alpha a little more. Bridgewater actually had a good section on its website that used to explain about, I don't know what happened to it. So the idea of Pure Alpha was to separate alpha from beta. So beta is the passive return that a portfolio might get from the ups and downs of the benchmarks, such as the S&P 500, where alpha is the measure of the actual manager's return with the same risk in excess of the beta. So it's funny because a lot of mutual fund managers and even hedge fund managers, they're just harvesting beta, which means they're going long with the market and producing, if they're really good, what the market produces. Actually, it's something crazy like 90% of mutual fund managers underperform their benchmark. And all of that is beta. So if you just passively threw your money into an ETF, you'd be doing the same thing. So why Dalio called this strategy his Pure Alpha strategy is because it had nothing to do with those beta returns. And the whole Pure Alpha strategy comes from Ray Dalio's idea of the Holy Grail of investing. So he says the Holy Grail is 15 or more uncorrelated return streams, either beta or alphas. According to Dalio, such a portfolio reduces risk by 80%. But of course, the tricky part is is finding a large number of reliable, uncorrelated money-making sources of alpha in the first place. If it were easy, everyone would do it. And it requires venturing far beyond the bounds of equities. Today, Bridgewater's computers scan the world for opportunities in roughly 100 different categories, or as we saw before, that's actually 150, ranging from directional bets on the price of industrial metals to relative bets on pairs of emerging market countries' interest rates. So if I didn't mention before, Bridgewater is global macro, which means they get into absolutely everything. And having the funds so widely diversified reduces the risk of a major blow-up, and it limits the impact the pure alpha can have on any one market. So a few things here. When Dalio is talking about uncorrelated, he's not looking at it simply like putting two charts on top of each other and seeing how closely they move together. Dalio has deep research that goes back hundreds of years, seeing how different assets work with each other in different types of market environments. So it's way more advanced than pretty much anyone else, which is why he's so successful at it. So I'm sure if you actually saw his portfolio at some points in time, it wouldn't make sense. You would think, okay, these things are definitely correlated. But that would just be our simple understanding of how these things work, where he knows way more with his deeper research. And the second reason this is good is because they have so many billions of dollars that they don't want to affect any one market too much. So having 15 uncorrelated investments, you could really spread out all that money. And the other strategy that Dalio uses is called the all-weather strategy, which last year lost a little over 6%. Now, the all-weather strategy still takes into account that holy grail of uncorrelated investments, but the all-weather was actually the first strategy to teach everyone about risk parity. And risk parity is an approach to investment portfolio management which focuses on allocation of risk, usually defined as volatility rather than the allocation of capital. So each asset, like if they have bonds, stocks, real estate, they will contribute equally to the portfolio's overall volatility. So basically, in simple terms, what risk parity is putting a certain amount of money into each asset, and these won't be equal amounts. The amounts will be based on how volatile that asset is. So you can think about it like each day, each asset class will contribute the same amounts of gains or losses to the total portfolio. So you really spread out the risk between all those asset classes. Now, obviously, it's a little bit more complicated than that. And the way Dalio does it, again, isn't off purely looking at charts of volatility in just the short term. He looks at the multiple hundreds of years data, which makes it very different than what you and me could come up with by just looking at Thinkorswim for a few hours. Now, on top of all those uncorrelated investments, Dalio, as we've seen, also has multiple strategies working together. So we saw that the all-weather portfolio lost a little more than 6% last year, but the alpha clearly made up for it. Now, let me know down below what you think of Big Daddy Dalio, and let me know what you're doing to reduce the risk in your portfolio, because oftentimes what we think is reducing risk, like investing in multiple different stocks instead of just one, I mean, it is reducing risk, but not really compared to what someone like Dalio is doing, because all equities usually move the same way. But anyway, comment down below with that, or say something, anything at all. We'll talk about it. And I know this video probably made you feel like you're missing out on returns like Dalio. So if you're feeling that, make sure you check out my FOMO trading guide. You can download it for free. Just click the link in this video or down below in the comments and description, throw in your email address and it'll be sent to you. And basically it goes over multiple strategies you can use to avoid feeling emotions like FOMO while you're trading, because emotions like FOMO are what are going to screw up your returns. They make you do stupid things. So check that out, and don't forget to subscribe to this channel and hit that bell for an email notification when our next video comes out. We do at least 3 a week, all business and market related. So subscribe and I'll see you in the next video. Bye.